Namaskar. A warm welcome to all of you at today's webinar on important issues under GST. Today's CA Sansaar coordinators are not here, so I have to start myself. So we have received many requests to organize a webinar on the this critical issues under the GST because lots of confusion regarding the ITC input tax credit under GST. वैसे तो देखा जाए तो GST itself it's a confusing. I think it's only this GST जिसमें maximum amendments are there. Even पता ही नहीं चलता रात को हम सोते हैं नेक्स्ट डे कितनी नोटिफिकेशन सर्कुलर्स आर देयर. Even government is trying to simplify it, but day by day it's going more and more complicated. And regarding GST means lots of confusion, 10%, 5%, 2.5% मिलेगा या नहीं मिलेगा. So for that we have with us our guest speaker, very talented, young and generating member with us, CA Surbhi Premi ji. Thank you, Surbhi ji, for accepting our invitation and for your valuable time for this important webinar. Thank you very much. And before hand over to Surbhi ji, let me give her brief profile. She is qualified chartered accountant and also law graduate, and she is also a All India merit holder from the Institute of Chartered Accountant of India, and also done diploma in IFRS from ACCA UK. And she has been associated with the Lakshmikumaran and Sridharan and approximately more than 10 years, and has worked extensively in the area of GST and service tax advisory. And before that, before Lakshmikumaran and Sridharan, she worked for a global investment bank, namely Goldman Sachs. And during her tenure in Lakshmikumaran and Sridharan, she has advised clients in various sectors, including real estate, logistics, tour and travel, hospitality, oil and gas, healthcare, information technology, telecom, e-commerce, liquor, EPC, power, iron and metal, etc. I think कोई sector छोड़ा नहीं आपने सुरभि जी. And she's also a visiting faculty with the ICI, and her articles published in many newspapers, even this one professional website, but अभी CA संसार पे कोई publish नहीं हुआ है, and we request her to also post some valuable articles on CA Sansaar itself also. So now, without taking so much time, my request to Surbhi ji to please guide us regarding these burning issues under the input tax credit, and whatever the issues you have, you can also post in the query section. We will discuss with the Surbhi ji after his deliberation. So once again, my sincere thanks. Now it's over to Surbhi ji. Thank you very much.
Thank you, Vivek sir. Thank you for your kind words. I hope my screen is visible.
Yeah, exactly.
Okay. So today, as Vivek ji mentioned, that we would be discussing regarding intricacies of input tax credit under GST. Input tax credit is a backbone of GST structure, because if you can optimize or maximize your input tax credit, then your business can sustain, because chances of escaping any tax on outward is not possible. So your optimum tax credit should be optimized, input tax credit should be optimized within the legal framework. There have been lot of issues relating to input tax credit. Considering the time limit, I have picked few of them which we'll be discussing today. So, what we'll be discussing today, first we will discuss ITC eligibility based on GSTR 2B. Wide Finance Act 2021, government has introduced clause AA in section 16(2), which requires you to avail credit based on GSTR 2B. That would be our first point of discussion. I also understand that this particular topic has been discussed at length in the previous session, so I'll not go into too much detail, but some legality of this provision. And secondly, we will discuss ITC availment based on payment of GST to the government by the supplier. So we will discuss whether this provision itself is valid, how to deal with the notices that government is throwing on the recipients who are genuine. So we'll be discussing all those things. Third, we'll pick up ITC for construction of immovable property other than plant and machinery. In this, we will understand what is meant by immovable property, what is plant and machinery, what are the cases where you are eligible, and what are the cases where you are not eligible, and what are the prevailing controversies. Fourth, we would be discussing sales promotion schemes. So, the topics that I have picked up, I try to pick those topics which are relevant for industries across various sectors. So, in any company, marketing campaigns play a vital role. So, we'll be discussing GST related issues. Thereafter, we'll discuss various facilities which are provided to employees by an organization, whether the organization would be eligible for credit, and also eligibility to take credit on corporate social responsibility expenses. And there is one recent ruling regarding mandatory registration of ISD. So, therefore, I have picked up this topic as well, IST registration for distribution of ITC on common expenses. So, now let's begin with our first topic, ITC basis GSTR to be reconciliation. Before we go into the provision, let us quickly see how the law evolved. So, GST was firstly introduced in July 2017. When the law was introduced, they contemplated a matching mechanism. So, there was a concept of GSTR 1, GSTR 2, GSTR 3. Basis the GSTR 1 filed by the supplier, credit was supposed to be auto populated in 2A. Recipient has to perform certain action, modify, accept, reject, etc. Basis that the recipient was supposed to file 2, and these two statements, outward supply statement and ITC statement, basis these two statements, GSTR 3, which was the final return that was supposed to be furnished. However, that mechanism never came into picture. Now, what happened after that in 2018? One sudden day, somewhere in August 2018, portal started showing one return GSTR 2A. Now it was introduced as MIS report. Since GSTR 2 itself was not made effective, therefore there was no relevance of GSTR 2A. Yes, it was a trade facilitation measure. Department started throwing notice also for 3B and 2A reconciliation mismatch, etc. But soon after that, government issued a press release wherein they clarified that 2A is merely a trade facilitation measure. Your eligibility is not governed by 2A, but it is only a facility. So the law itself did not provide for 2A since 2 was not effective. Thereafter, in October 2019, they introduced a rule, Rule 36.4, which talked about provisional ITC. What they said that the credit which is appearing in 2A you can take, but those invoices which have not been uploaded by the supplier in GSTR 1 and therefore they are not reflecting, for that you can take provisional ITC of 20% of ITC available to you in 2A. So they introduced provisional ITC concept of 20%. Now till 2020 we have just GSTR 2A. Soon after that, in August 2020, one more IMS report started showing on the portal, and it was GSTR 2B. If we talk about 2A and 2B, 2A is dynamic document, 2B is static. So now the taxpayers started getting confused whether I have to reconcile with 2A or 2B for their provisional credit. So again there was a clarification wherein they said you can take basis 2B. However, if there is something additional in 2A, you can avail that also. Therefore, they left this issue open whether you want to avail credit basis 2A or 2B. The rule was introduced with the provisional credit of 20% on January 2020. They reduced it to 10%. Again in January 2021, they reduced it to 5%, and now 2022 they have reduced it to nil. So every new year they are giving you some surprises. So now what they have done in 2021, they introduced a rule where to be was recognized as a statement to ascertain your input tax in the rule. Again in 2021 there was no provision in the act. The provision in the act was first time introduced with effect from 1st January 2022, section 16 to AA. 36(4) also they amended because they removed the concept of provisional ITC, and since the section itself is now saying that you can avail credit whatever is appearing in GSTR 2B, section 37 it says, accordingly rule has been amended. So this is the historical background. Why I am giving this background, we will get to know when we will discuss intricacies of this provision. It is very important that we understand the background as well. Now, if we look at the statutory provision, 16.2 says notwithstanding, so it's a non-obstant clause. Anything contained in this section, no registered person shall be entitled to ITC in respect of any goods or services or both to him unless AA. The details of the invoice or debit note referred to in clause A has been furnished by the supplier in the statement of outward supplies. And what is that? That is GSTR 1. And such details have been communicated to the recipient of such invoice or debit note in the manner specified under section 37. And 37 would refer to the rules for the manner of communication. Now that manner of communication is to be. Now let us see what rules 36(4) says. It says no ITC shall be availed by a registered person in respect of invoices or debit notes, the details of which are required to be furnished under section 37(1), unless details of such invoice or debit notes have been furnished by supplier in statement of outward supplies in form GSTR1 or using invoice furnishing facility, and the details of such invoice or debit notes have been communicated to the registered person in form 2B. So now the act as well as the rule, they are leading to a situation where your ITC has been completely linked with the supplier's furnishing of GSTR 1. One more important thing is they have used the term invoice or debit note. So do we avail credit only based on invoice or debit note, or there are other documents as well? Yes, there are other documents as well. For example, for import of goods, the credit is availed based on bill of entry, and bill of entry data is also there in 2B. They have linked it with the ICE date. However, the provision is only talking about invoice or debit note. With this, let us see what are the intricacies and issues involved. Number one, whether this provision would be applicable in respect of my import of goods, import of services, and tax paid under RCM. So the answer is no, because it says based on invoice and debit notes. So import of goods, we are clear, because import of goods is based on bill of entry. Now you will say import of services and tax under RCM, there is an invoice. Import of service, there is a self invoice. Under RCM, there can be a invoice by the registered supplier or maybe by me. However, it says furnished by the supplier in a statement of outward supplies. So those invoice and debit notes which your supplier has furnished in his GSTR1, therefore this provision will not be applicable in the context of import of services and tax paid under RCM. Now, coming to one more relevant, very relevant question I am raising, because department these days is scrutinizing the returns, and throwing various kind of mismatch notices or recovery notices. So what is the impact of ITC which I have already availed, means pre 1st January 2022, and what would be the status of ITC that I am availing after 1st January 2022? Now, what are the possibilities? Firstly, let us discuss what are the possibilities, that thereafter we'll come to the Supreme Court decision on this aspect. Possibility is that you will say, I will look at the provision which was there when my right to avail this credit was accrued, or this credit was accrued to me. So that time I should see the provision. Now this provision came into force from 1st January 2022. You would say, my December invoices, this provision was not there in December 2021. So therefore, you would say for December I should get provisional credit because the right itself accrued in December. However, I am filing return on say 20th of January, but the right itself accrued in December, so I should get provisional ITC. Therefore, this is one view. Other view would be, no, this rule has already came into force from 1st January. Therefore, you should avail credit only of those invoices which are appearing in 2B. So I should see the return filing date. So what is the ruling of Supreme Court? Supreme Court erstwhile in mod wet regime. There is a beautiful decision of Supreme Court in Osram Surya Private Limited, wherein they have discussed whether you should see a condition at the time of accrual of the credit or at the time of availment. So they say you have to see it at the time of availment. Therefore, after 1st January 2022, whatever credit I am availing, that would be governed by section 16 to AA, even if this pertains to a period earlier to 1st January 2022. Now, what are the safeguards and strategies? Why I am discussing these safeguards and strategies? Because you are getting various kind of notices of mismatch, and also you now it's now you are no more eligible. It is if it is not appearing. So what you can do is, firstly, contractual safeguards. Therefore, in your contracts, you should provide for either you will make payment of GST to your supplier when it is reflected in your GSTR 2B. So, to that extent, payment you can withhold according to the contract. Or alternatively, you can provide for some indemnity clauses wherein you will be indemnified in case the supplier fails to furnish the return within the time limit. One more important point here, 16 to, there is one more provision, 16.4. So you have to avail credit by September month of the following financial year. Therefore, it becomes more relevant now that the supplier furnishes GSTR 1 within the time. If he is furnishing GSTR 1 post the timeline, post the sunset, say after September of the subsequent financial year, then he must be paying the tax. He must be paying interest also, but still you will not be entitled for credit. Therefore, first thing, it is very important that your supplier furnishes the return, and it is mandatory that they furnish it by September. So, just to press them, it is important that you save yourself by building up few clauses in your contract. So, contract structuring becomes very important. Now, moving to the next topic, which is ITC upon payment of GST to the government by the supplier. So there is one more condition, condition C. It says subject to the provisions of section 41 or section 43A. The tax charge in respect of such supply has been actually paid to the government either in cash or through utilization of ITC admissible in respect of the said supply. So this provision is contemplating that recipient, wait for a moment, you can't take credit unless your supplier has paid it to the government kitty. Now, what you can do is you can pay your supplier, and that is what is there in your hands. But whether your supplier has paid it to the government, it is beyond your control. Yes, it's a controversy, and such kind of provisions were there in earlier VAT regime also, and they were challenged. So we will quickly see what was held in those decisions. We will also see the recent decisions on this particular provision under GST regime. But before that, note one thing: this provision is subject to the provisions of Section 41 and 43A. What is 41? 41 allows provisional credit, and this is interlinked with 42, which talks about mismatch matching mechanism, which never came into picture. Therefore, this provision is lying dormant. And 43A was introduced when they contemplating new return system, which was later on scrapped. So they never notified this provision itself. Now a provision which is subject to certain provision, which are either lying dormant or they have not been notified, and they are laying down a mechanism. If the mechanism itself is not present, they can't insist that recipient stop, you can't take credit unless your supplier is paying the tax to the government. But still the provision is there, therefore department has every power to create nuisance out of it. And they are throwing notices. Practically we have seen they are throwing notices to the recipient saying so and so supplier is not paid tax, therefore you are not eligible for credit. In pre GST regime, I am talking about VAT regime, there were multiple high court cases, and in one case it was affirmed by Supreme Court also, wherein, if I talk about the ratio is, there are two kind of taxpayers: genuine and dishonest. In case the purchase transaction is genuine, the recipient is bona fide, then ITC would not be denied to him merely for the reason that the supplier has failed to discharge tax to government kitty. Mahalakshmi Cotton I have highlighted in a different color for the reason it's a negative ruling. Rest of the cases are positive. It's a Bombay High Court decision wherein they denied. The reason was that in this particular case there some fake invoicing fraudulent case was involved, therefore it came out to be negative. However, the ratio of all these decision is that if there is no collusion between the supplier and the recipient is bona fide doing a genuine transaction, he is entitled for credit even if there is a provision in the statute which denies credit to you. Now with this background, let us quickly see post GST regime. Now we have two favorable High Court decisions. One is Madras High Court, other is Calcutta High Court. In Madras High Court, they said in case of default in payment of tax by the supplier, recovery shall be first made from the seller. They can't directly come to the recipient and say, "A recipient, you are not entitled for ITC because your supplier has failed." They are saying firstly catch the supplier or the seller. In case he is non-existent, then only they can come to you. This was the ratio of Madras High Court. Now the Calcutta High Court, it says petitioner shall be given benefit of ITC if transactions in question are genuine and made before cancellation of registration of supplier. So now LGW is very much saying what was held in earlier regime. They are saying if you are genuine and the supplier was having a genuine GST registration when the transaction was undertaken, you are entitled for credit. So now you have two favorable decision in GST regime also. So even if you get a notice from the department, you can reply based on these lines that your credit should not be denied. uh, One more thing, the constitutional validity of this provision has been challenged and the matter is pending before Delhi High Court. And what are the safeguards and strategies? So see, uh, legal battle, definitely you have grounds to contend, but still the first preference should be that such cases should not arise and you should not go for litigation. In such a case, again, there is a need that there are some safeguards and indemnity clauses in your contract wherein you state that in case the supplier defaults in the payment of GST basis which recipient's credited denied, you have the power to recover ITC back from the supplier or you will withhold it. So, depending on your commercial terms with your supplier, you can structure your contracts. Coming on to the next topic, very relevant, ITC on construction of immovable property other than plant and machinery. So 17.5 says, non-obstant clause, ITC shall not be available in respect of following. C. Works contract service when supplied for construction of immovable property other than plant and machinery, except where it is an input service for further supply of works contract service. Firstly, let's try to understand this provision. What they are saying, recipient, you will not be entitled for credit of works contract service unless and until you yourself are supplying works contract service. Okay, now it also says which is supplied for construction of immovable property. So the relevant term is for construction of immovable property. We should understand what is immovable property. This term is not defined under GST Act. Therefore, we will see how this has been interpreted by various courts other than plant and machinery. Why there is a need for exclusion? There is a need for exclusion because in few cases the plant and machinery itself will take shape of immovable property. If my plant and machinery are movable in nature, I am not at all governed by provision C because it merely restricts credit on immovable property. So plant and machinery which are in the nature of immovable property is still, they'll not get covered in the negative list. You will be entitled for credit. Coming on to provision D. C was only for works contract service. D is for everything, all goods and services received by taxable person for construction of an immovable property other than plant or machinery on his own account. On his own account. Very important term. Including when such goods or services or both are used in the course or furtherance of business. So they are saying even if the goods and services are used in the business, if they are meant for construction of immovable property on your own account, no ITC is eligible. So simple meaning of on his own account would be that building is meant for you. For example, your factory, construction of your factory. So that is a construction of immovable property on your own account. What is not own account? For example, I am constructing to sell it to somebody else. So say I am DLF, I am constructing a commercial complex, and in turn I am availing services of a subcontractor, say L&T. So I can take credit of works contract service, goods or services, everything, because this is not own account. I am supposed to sell out these units. These units are meant for sale. These are not on his own account. But what is the controversy here is the case where you will get it constructed for further leasing. And there is a case also of Orissa High Court. We will discuss that in subsequent slides. Before that, let us look at the explanations also. Explanation says, for the purposes of clause C and D, the expression construction includes reconstruction, renovation, addition, alteration, or repair to the extent of capitalization to the said immovable property. Meaning thereby, construction which is in the nature of say repair, addition, alteration, etc., you will be entitled for credit if it has been expensed off in P&L account. But if it has been capitalized, then you will be governed by the negative list, namely clause C and D. Now, second explanation, it is relevant for understanding the meaning of plant and machinery because there is an exclusion for that. It says, for the purposes of this chapter and chapter 6, the expression plant and machinery means apparatus, equipment, machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both, and includes such foundation and structural support but excludes land, building, or any other civil structure, telecommunication tower, pipeline laid outside the factory premises. So, to understand it in a simple term, they are saying plant and machinery would include machinery, apparatus, equipment, etc. fixed to earth by foundation. Why they need to say this? Because this clause itself is talking about immovable property. Therefore, they are saying fixed to earth by foundation or structural support. They are the plant and machinery for the purpose of this clause and include such foundation and structural support. They are saying plant and machinery would also include its foundation and structural support, meaning thereby, even if the foundation is a civil structure, you will be entitled for credit thereon, because it says plant and machinery includes foundation and structural support but excludes. So you will not be entitled for credit on land, building, or any other civil structure which is not the foundation or structural support for plant and machinery. You will not be entitled for credit on telecommunication tower. You will not be entitled for credit on pipeline laid outside the factory premises. So now we have looked at the statutory provision. Now let us move to understand what is immovable property, because that is the essence of this particular provision and this term has not been defined. When a term is not defined in the statute, what can we do? We can look at the meaning under General Clauses Act, or we can go to a act which provides for the similar matter, or otherwise dictionary meaning, etc. So immovable property has been defined under General Clauses Act. It says immovable property shall include land, benefit arising out of land, things attached to earth, or permanently fastened to anything attached to earth. So three things. Land. Everybody understand what is land. Benefits to arise out of land. It means, for example, development right. Development right which a landowner gives to developer for construction of, say, some residential or commercial complex for further sale. So there are high court decision, uh, Cheddar Housing, Bombay High Court, and other decision which says benefit arising out of land would include DR, development right, and hence it is an immovable property. Things attached to the earth, for example, some machinery which has been attached to the earth, or say building. The best example would be building, things attached to the earth. Third bullet says permanently fastened to anything attached to the earth. What is that? In building, you have doors, you have windows. So even if this door can be unbolted, you can move it, but it is permanently fastened to anything attached to the earth. Therefore, it is again an immovable property. Your doors and windows would be construed as immovable property. Now, there have been lot of decision. There have been uh, uh, confusions regarding interpretation of immovable property. There are a series of Supreme Court decision on this matter. So I am not discussing all the cases one by one. What I am doing is I will tell you what is the ratio of the decisions. So the ratio is, there are two tests. One test is degree and extent of attachment. Therefore, if after attaching it, it becomes immovable, in the sense you can't move it to a different location unless and until you dismantle it. So if that is the case, then it is immovable. Other case is intent of attachment. Intent of attachment is, even if the article can be moved, there is no need for dismantling it, it can be moved, but the intention is to use it with the land for the beneficial enjoyment of the land permanently. Therefore, if the intention is to enjoy the property itself, even if the article is movable, we will look at the intent. For example, uh, there are some say wash basins. When you construct a building, there would be wash basins. Sometimes that wash basins are capable of moving to a different location. There is no need to dismantle it, but they are meant for using the property, and the intention is to use them there permanently. Therefore, this is the intention test. These are the two tests which comes out of reading of several Supreme Court decisions. Now moving on to the various rulings. So there are several rulings. I have picked up just sample rulings which are on different subject matters. So first is GM Chemicals. So in this particular case, the question was whether you will be entitled for credit of lease premium. So the AAR denied it. They said lease premium is for construction. So they say the word used in the provision is for. It says goods or services received by taxable person for construction, works contract service supplied for construction. So they said the word used is for, and it is of wide import, and therefore lease premium, lease premium for the land. Say you have taken a land on lease on which you will construct superstructure, and thereafter you will run your business. So they are saying you will not be entitled for GST paid on lease rentals. This is the ruling. So according to me, the ruling is incorrect, because leasing is not used for construction. It is a step prior to construction. But this is the ruling of Gujarat. Now, next ruling, it says ITC not admissible of AC, cooling system, etc. They said these are immovable property and therefore you will not be entitled for credit. No doubt that these are immovable property, and hence there was a need for exclusion. They have clearly excluded plant and machinery. Even if plant and machinery are immovable, you are entitled for credit. So these rulings are also incorrect, because they are saying you are not entitled because they are immovable. They are immovable, yet they are plant and machinery. Therefore, you should be entitled for credit. Next ruling is regarding HVAC system, lift, roof, solar plant, etc. On the same lines we have already discussed. What are the issues and intricacies? First is constitutional validity and legality of 17.5C, 17.5D, whether these provisions are constitutionally valid. Because when GST was introduced, they introduced with the mindset that there should be a free flow of credit. Therefore, why they are restricting this credit? And in few cases, you will be paying tax on your outward supply. So why there is a restriction? So these had been challenged before high courts. Decisions are pending. Second is ITC of construction services for payment of GST on lease rental. Yes, this is interesting ruling which I was talking about earlier on his interpretation of the word on his own account. For example, you are say you get a mall constructed and you are giving shops on rental. Now whether you will be entitled for credit. So there are two clauses. First clause was works contract service. You can avail credit only if you are supplying works contract service. So definitely I'll not be entitled for works contract service, because my outward supply is not of works contract. My outward supply is that of lease rental. D clause, but I'll be hit by clause D. It says on his own account. Now, without interpreting this particular term, this high court, it's a beneficial ruling. This high court said, since you are paying tax on your outward supply, therefore you should be entitled for credit. They have read down the provision of 17.5D, but they are not saying that this is constitutionally invalid. And the department has went into appeal before the Supreme Court. Therefore, what should be done in such cases is you should avail the credit and thereafter you should reverse it. Why I am saying so, I'll tell you. So once the positive ruling comes, you can re-avail the credit. So take credit, reverse it, and re-avail when the final Supreme Court ruling is there, and if that comes to be favorable. I am saying to take, reverse, and retake for the reason there is a sunset clause. You can't take credit beyond September month of the next financial year, but there are various rulings which says that the restriction of availing credit, the time limit, a restriction for availing credit is applicable for first time of availment, not on re-availment. So again, but that is not free from dispute, because somebody can say that those things should be applicable in case your first credit was an eligible credit. But there are ground that you can use this and avail credit, reverse it, and reavail later on. Now coming on to the next topic, which is discount and incentive schemes. So before dwelling upon the topic, let us understand what are the various types of discount and incentive schemes which are prevalent in the market. So distribution of free goods. So generally there is a chain. There would be a manufacturer, then there would be dealer distributor network, retailers, wholesalers, retailers, ultimate consumer. So the manufacturer will float various kind of a scheme, or sometimes to incentivize them, they'll freely distribute goods or they'll give them free services. Goods, they can give them gift vouchers. To increase the sale, they can come up with the scheme buy one get one free, etc. Target incentive scheme: if you buy so and so quantity in this quarter, I will give you so and so discount, so much discount. Or if you get this much quantity from me, upon say upon completion of a year, etc., I'll give you gold coin or AC TV, etc. So these are various kind of schemes. We will come on to this slide again after understanding the provision. So you have understood the background. Now look at the legal provisions. So the beauty of the law is that you can't just look at a single provision. You will have to look at various provision to arrive at any strategy or to see what are the implications. I have schedule 1, which says activities to be treated as supply even if they are made without consideration. It says permanent transfer or disposal of asset, business asset, where ITC has been availed on such asset. So if I have purchased a laptop and I give it free to somebody, that's a permanent disposal without consideration. Even if there is no consideration, schedule 1 deem it to be a supply, you will have to pay tax. Now section 8. Section 8 is regarding composite and mixed supply. In case of composite supply, you will pay tax which is applicable on the principal supply. In case of mixed supply, you will pay the tax which attracts highest rate, the component which attracts highest rate. Then 17.5. 17.5 is the negative list. So they are saying you will not be entitled for credit if goods, services are both used for personal consumption, goods lost, stolen, destroyed, written off, disposed of by way of gift or free samples. So our attention area is gift. So it says goods disposed of by way of gift. So these are the legal provision which we will use while making a decision. Now again, gift is not defined here. So gift is defined in Transfer of Property Act. It says gift is transfer of certain existing movable or immovable property made voluntarily or without consideration. And without consideration. There is Australian ruling which says if the payment is truly unconditional, then it is not a consideration. One more provision is relevant, which is pertaining to discount. So there are two kinds of discount: discount which is given on the invoice itself, discount which is given later on. You have already sold the goods. Say it's a volume discount. The distributor is buying goods from the manufacturer throughout the year. He has achieved a target, and for achieving that target, I am giving him a bulk discount, which is a post supply discount. So what these provisions say: the value of supply shall not include any discount which is given before or at the time of supply if such discount has been duly recorded in the invoice issued in respect of supply. So discount should be recorded in invoice. You can and that would be excluded from the value of the supply. 15.3b, the value of supply shall not include any discount which is given after supply has been effective if such discount is established in terms of an agreement entered into at or before the time of such supply and specifically linked to the relevant invoice. So there should be a pre-agreement that you are going to give him a volume discount. It is not that he has achieved it and thereafter you are giving him a credit note. It should be known in the beginning that if you achieve this quantity of purchase from me, you are entitled for credit. credit note or discount. ITC is attributable to the discount on the basis of document issued by supplier has been reversed by the recipient of supplier. Since you will reduce it from your value, they are saying will not give double benefit. You will not pay tax, you will reduce it from your output tax, but your recipient has already availed credit, so they are saying your recipient should reverse the credit, then only I will give you output tax adjustment. So certain rulings on the discounts. So first ruling says that it should be in terms of the agreement. It should not be open ended. Then only it will qualify as post supply discount. Second ruling. So it says the question is when you are giving the credit note to the recipient sometimes, and the recipient can be distributor. So sometimes there is an allegation that it's not discount, it is actually a payment to your distributor, and distributor is giving you marketing promotion services, so your recipient should raise a tax invoice. So this ruling says that it is actually a discount, and the recipient need not raise any invoice on the supplier for receiving the discount. Third is regarding reversal of credit. It is not necessary always that you will give the GST credit note. Sometimes you will give commercial credit note. So in that case, when you give commercial credit note, you will not adjust your output tax liability. At that same time, your recipient would also not be required to reverse the credit. Then what is the controversy here? The controversy is they will say, since you have not made full payment, therefore reverse credit. Because in ITC provision, section 16, it says that if you don't make the payment of the value or the tax to your supplier, you have to reverse credit. 180 days timeline it gives to the recipient. So they allege that you the credit note, commercial credit note that you are receiving, so effectively you have not paid that proportionate consideration to your supplier. They are saying reverse it. So this is a positive ruling, favorable, and it is a correct ruling, which says so as to the extent there is no refund of tax or reversal of tax because the transaction is undertaking through commercial credit notes, there is no need to reverse any credit. There is no failure to pay tax or the amount. It is actually in the nature of discount. So other incentive schemes. So first is gold coins. Gold coins which are distributed to customer at the end of the scheme period. So this is target incentive scheme. At the end of the scheme, I will give you gold coin. Now the question is whether I would be eligible for credit. So here they said, firstly, it should qualify as a supply because your schedule 1 says if you give anything for free, permanent disposal without consideration, even that case would be covered within the meaning of supply. But it says if you don't pay tax, then you can take if no output tax paid on such bonus items, say gold coins, no ITC available. So this ruling is very vague. It gives you both the options. But if you want to use in your favor, you can use it. But this ruling itself is very vague. So either there would be a contractual obligation where you are supposed to give them the gold coin. If there is a contractual obligation, it would qualify as a mixed supply, because in the business there is a concept that nothing goes for free, and this they have recognized in a circular of 2019 also. So they say you are not giving it free, you have already inbuilt its price in the original or main supply. So for example, I am otherwise selling stationery items, and at the end of it, I based on the target, I am giving you a gold coin. So it becomes a mixed supply, so highest rate would be applicable. So while floating the marketing scheme, one should be very careful that whatever you are supplying free, that bonus item should not attract higher rate than the main supply itself, because once it becomes a mixed supply, entire bundle of supplies would be liable for highest rate. So now Sanofi India, It says procurement of goods for loyalty program qualifies as gift. ITC is not available. This is fine because there was no contractual obligation. Without contractual obligation, if you are giving, it's gift, and for gift there is no ITC. Page Industries. It says GST paid on procurement of promotional item like rack, wall shelves, panel, etc. supplied to franchisees, distributor free of charge, not be eligible for ITC because the supply is non-taxable supply. So either I can go into Schedule 1, I can say it's a permanent disposal, and therefore I can pay tax on outward supply and take credit. Alternatively, I'll just not avail credit and I'll also not pay tax on the outward supply. So this is Page Industries. Now, whatever I have discussed, this was pertaining to discounts, and the second slide was pertaining to incentive schemes where you are distributing the goods. Now, let's see when you give services as incentive. So, you say that uh, for example, second ruling, GRB dairy foods buy and fly scheme. They say if you buy so much quantity over a period of time, I'll give you trip to Dubai and it would be free. Same case was in the case of Surfa codes. I was giving free foreign trips or local trips to the painters and dealers. Now the question is whether I am supposed to reverse any credit. So they said yes. They said you will be required to reverse credit under 17.5H. So the distinction between Surfa codes and GRB dairy is Surfa codes denied credit under 17.5H. GRB dairy foods denied credit under 17.5G. Now quickly see what were these clauses. G was denying you credit for personal consumption. H was denying you credit for the gift. So, firstly, gift. When you are giving a free foreign trip, whether that's a gift, maybe, but see, the clause say goods. This clause is not for services. Clause G is referring to goods or services, but clause H is only for goods. It is not for services. Therefore, Surfa code ruling is incorrect to that extent. Now, coming on to the next ruling, GRB Dairy, where they are talking about the personal consumption. Whenever we look at the personal consumption, that consumption has to be seen vis-a-vis the taxpayer. Ultimately, somebody is personally consuming, that is not relevant. Your distributors are personally consuming, that is irrelevant. Personal consumption should be of your entity. So, therefore, that ruling is also incorrect. Now, premier sales promotion. Very, very interesting ruling. So, this is appellate ruling. So, what they have said here is vouchers. Vouchers qualify to be movable property and therefore they are goods. So now you can ask me, why are you discussing this? This is not talking about any kind of incentive, etc. I am talking this generally what people in the industry understands. They think that voucher is merely a mode of payment because voucher has been defined in GST as an instrument which the supplier is supposed to accept. There is an obligation on the supplier to accept as consideration or part consideration. So they say this is merely a form of payment, but we have to see the underlying supply of goods or services. But this decision or this ruling is saying voucher itself is goods, so underlying goods and services I'll tax separately, voucher I will tax separately. So industry should be very cautious when you are distributing free vouchers to your distributor dealers for promotional scheme, etc. Because once you accept that it is a gift, though this is a contentious issue, but if you accept this ruling to be correct and say it's goods, then schedule 1 would also be attracted, which says permanent transfer disposal of business asset should be qualified as supply even if without consideration. And also if you accept it to be goods, then goods given as gift requiring reversal of credit would also be attracted. So I highlighted this ruling for the reason that yes, there is a ruling in GST regime which is saying vouchers themselves are separately taxable as goods. But what would be the fate of this ruling? We will get to know in few years down the line when this issue comes up before the High Court, Supreme Court. So, what are the issues and intricacies? We have to see something whether it is really free. Buy one get one. It is not free. It is always the price is always already inbuilt in the price of the main supply. Target incentive scheme, where you say if you buy 500 laptops, I'll give you XYZ. So again, that is not free because price is already inbuilt. But if I voluntarily give on some say occasion, Diwali occasion, I distribute some gifts, they are free. So they are the gifts. So you have to see whether it is really free, whether schedule one supply, whether deemed supply clause would be applicable, whether it would become a composite or mixed supply. I have already explained the case of gold coin, and whether consideration for service of dealer distributor, which I explained in the context of raising of a tax invoice. There is a ruling which says that recipient who is getting the credit note, which is a dealer distributor, is in fact giving marketing promotion service to the manufacturer. So instead of credit note, there should be a service invoice. In service tax regime, there are series of decisions which are saying that dealer distributor, it is their role. They are selling the product, it is their role. They are not doing anything extra, they are not giving any service to the manufacturer. So there are clear jurisprudence on this. Whether condition of a contract, okay, this point I will explain, I have not explained. So for example, I am manufacturer of a beverage, say Coca-Cola. So you are my dealer distributor. I give you fridge where you can store the soft drinks. So now the question is whether that is permanent disposal of refrigerator. I'll have to reverse the credit. Whether that is a gift to the dealer distributor and therefore I'm not entitled for credit. So those kind of questions would arise. So here, condition of contract, you will have to see whether there is a condition in the contract between the beverage manufacturer, say Coca-Cola, and its distributor, where I am giving refrigerator for the specific purpose that you have to store Coke bottles in this fridge, and once after so and so period, you have to give the fridge back to me. So if that is the case, there are no implications. Whether ITC reversal required, so we'll have to see whether clause 17.5H would be hit. 17.5G, according to me, will not be applicable because personal consumption has to be seen vis-a-vis the taxable person, not anybody's personal consumption. Okay. So the next one is ITC on facilities provided to employees. Now the legal provision, you have to take into consideration two things. First, schedule 1 says that if employer provides anything to the employee, that would be construed because they are related party. So even without consideration, it would be a supply. Schedule 3 says service provided by employee to employer, that is neither supply of goods or services, that is excluded. So these are the legal provisions. What kind of transactions occur between the employer and employee? There can be several transactions. You can provide cab transportation to your employees, you can give them food and drink, canteen services, you can give them insurance, you can give them insurance for themselves, you can give insurance for their parents and dependents, you can give them crash facilities. So there can be various kind of facilities which employer extends for the employee. So a legal provision I have summarized here. So, food and beverage, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting, hiring of restricted vehicles. So, in these cases, credited not entitled. There are exceptions. There are two exceptions. You can see two arrows in the PPT. First is if it is used for making the outward supply of the same category, or if it is used as an element of taxable composite or mixed supply, or it is an obligation for the employer to provide such goods and services to the employee under any law. For example, canteen facility in certain cases is a mandate under Factories Act for the employer to provide it to the employee. Membership of club, LTC given to the employees. Here, first exception is not there. Here only it would be entitled for credit when obligatory for the employer to give it under any law. So let us quickly do a case study that will clear our concepts. So the case study is, take an example of car. Car, I am an entity. I can either purchase the car or I can take it on lease basis, and thereafter I can provide this car to my employees. I can provide to the employee on FOC basis. I'll not recover anything, or I will recover anything. I'll give cab facility but at a subsidized rate. So what are the implication? For purchase, now 17.5b says you will not be entitled for credit in cases of leasing, renting, hiring. It does not talk about purchase, and purchase of motor vehicle is barred under clause A also. Therefore, for purchase of cars which you purchase it and in turn you are giving it to the employee, there is no credit. But if you recover it from the employee on the same lease basis, credit would be allowed. On the hired recovery from the employees, it becomes your output activity, therefore credit is entitled. No recovery from the employee and you give it as in part and parcel of employment, generally no credit, but credit would be eligible if it is obligatory. In certain cases, there is a mandate that for women employees you should provide a cab facility if they are leaving office after so many hours. Now, coming on to the rulings, Tata Motors. So eligibility of ITC or GST charged by provider on canteen facility provided to employees working in factory. So they said credit is not admissible. So next, Bharat Oman Refinery, telephone charges, canteen facility. So here it was saying canteen facility was required to be provided under Factories Act and therefore credit would be eligible. For telephone, they are saying ITC of GST paid to BSNL on usage charges recovered from employees would not be available to appellant as they are not providing outward supply of telephone service and the facility is also not attributable to purchase of their business. So this is what they are saying. So but what we have to keep in mind, we have to keep in mind two things. If they are falling under category 1, food, beverages, this, that, etc., I am entitled for credit if I am making the outward supply of the same or it is obligatory. That is something we have to keep in mind. And one more important thing we have to keep in mind, that if there is a recovery, then it becomes a supply, no doubt. But if there is no recovery, then the question arises whether it becomes a supply. Employer and employees have been deemed to be related, and therefore, even without consideration, it would be a supply. But there is an exception. What is that? If it is provided in the course of employment, then there is no supply. So you have to see whether the supply has been made to the employee in the course of employment. If the answer is yes, then there would not be any tax if there is no recovery. If there is a recovery, there would be a tax, and accordingly, you will be entitled for credit. This is the sum and substance of these discussions. Transport facility, on the similar lines what we have discussed already. Insurance. So for insurance, there can be two kind of insurance: insurance for the employee or insurance for the parents of the employee. You may give it free or you may recover. If it is under the employment contract, then in such a case it doesn't become outward supply. and accordingly, unless and until it is a mandatory, it is a mandate under any law, you will not be entitled for credit. But this particular ruling is very interesting. It says it is not your business. Giving insurance is not the business of the SSE, and therefore it is not an outward supply, and accordingly you will not be entitled for credit. Okay, so this is the kind of ruling we got from various advanced ruling authorities. However, in such a case, we'll have to see the definition of business, which is very wide. So everything and anything, even if it is not your core business, it becomes a business. So if you recover something, you'll be liable for charging GST. You can take ITC thereof. And if it is given under employment contract, then no question of charging anything, but you will be barred from taking credit for the reason that it is falling under 17.5. So there are various issues here. Uh, okay, so I'll address them quickly because I think I am overshooting the time. So let me check. Vivek ji, hello.
Yes, we have time. Yes, yes,
Okay, okay, sir.
yes, yes.
So
Then we'll
so
discuss queries also.
okay, sir. Okay. So first is provision of canteen facility. So we have seen that if it is mandatory under any law, you will be entitled for credit. So is it only for the employees or contractual labor also? Because canteen you will be running for labor also. Here we can, if we look at the provision, it only talks about the employees. So mandatory for employees, not contractual labor. So you will not be entitled. This is the first issue. Second is uniform, gloves, helmet, safety shoes, laptop, etc. given to the employees. Now you will say, ma'am, you were saying that if we give anything for free, it becomes a supply under Schedule 1, or alternatively, it's a gift. So I should reverse credit. No. In these cases, these are given as a condition of employment contract. I also discuss about condition of a contract. These are given as a condition of contract. Laptop also you are giving while he is in employment with you. Once he will leave the organization, he'll have to return the laptop. So in these cases, your credit would be safe. Number three, calendar, diary, pen, Diwali gift, etc. So these are the things which are given free as gift. You will be required to reverse the credit. But Schedule 1 says up to 50,000 in a financial year, you are allowed to give any item to your employees. So to that extent, no problem. Number four, mask, sanitizer, thermometer. So because of the COVID, many organization distributes masks, sanitizer, etc. to their employees. So the question came whether there is entitlement for credit on these items. So if you have given them free without any further condition, then definitely you will be required to reverse the credit. But for example, you are giving mask and making it a mandate that you have to wear it while working in the office, so it becomes a condition of employment, then there is no question of reversal. Same goes for sanitizer. If you have not distributed, like they are not carrying it to their home, it is there in the office and on their desk, they can use it. It is again in the course of employment, then again no reversal. Give vouchers to the employees, same issue would arise in case of the vouchers, which I referred at the time of sales promotion. Whether voucher itself is goods is a big question mark. Crash facility provided to the children of female employees. Now crash facility, when you provide, uh, so there is an act wherein if there are certain employees, I think 50 or above employees, they say that it is mandatory that you have a crash facility in your premises, but it says in your premises. For example, you give the crash facility but not in your premises. There is a daycare or crash near to the office and you say, I will reimburse, I will pay to the daycare or to the crash directly. And therefore, they are raising an invoice on the entity charging GST thereon. Whether you will be entitled for credit, the answer would be no. For the reason that it is not mandatory under any law. but if there is any law prevailing under some local laws, etc., then credit would be entitled. So I will cover up remaining segments very quickly because the legal provisions we have already seen, so I'll not repeat that. So CSR. CSR is a mandatory requirement for certain companies having a certain threshold turnover limit, etc., under section 135. So there can be different kind of CSR. You can directly provide fund to certain relief fund, for example PM care fund, etc. In COVID time they introduce construction or uh, construction or repair maintenance of hostels. So there are some hostels, you are spending funds on construction, or you are spending fund on repair maintenance. So there can be different, you can distribute COVID relief material. So you can distribute uh, sanitizer mask to needy people. So there can be various forms. We'll have to keep in mind the basic principles. uh, Whether it is covered under 17.5 and therefore barred, if I am contributing the funds, no problem. There is no question of GST, it's a grant, no GST is there on the grant, no question of taking any ITC because there is no GST in first place. So if you are distributing COVID relief material, so it's a kind of gift, you are supposed to reverse the credit, otherwise you need to pay GST under schedule 1. Construction, we have already seen that construction is barred under 17.5 C and D. You can't take credit. Repair and maintenance, you can take credit if you expense off in your P&L. Okay, so we have to keep all the provisions in mind. So we have already seen the legal provisions. Quickly, so these are the rulings. So first, polycab. So this was Kerala, when flood came in Kerala, so they were distributing certain electrical items, so they said that ITC shall not be available because it's a gift. Dwarikesh Sugar UP ka AR. So it says in the course of business. So there says CASansaar is incurred in the course of business and it is mandatory. So it is not gift because companies that make it a liability on me that I need to spend funds. Therefore, I should be entitled. It's a favorable ruling. I'm not saying whether it is correct or not, but it's a favorable ruling that you can try to apply. So we have earlier various sested decisions. They are saying that it is in the course of furtherance of business. Whether it can be doubted because in income tax there is no deduction for CSR expenses. So my answer would be in income tax there is a clear exclusion, but in GST there is no exclusion. So whatever you are doing, that is for the business itself, no doubt about it. But you have to consider schedule 1 also. If it is free, then permanent disposal becomes a supply and you have to pay GST, otherwise you have to reverse. You can use Dwarikesh Sugar Industries ruling if you want to. Okay, so the last topic for today is ISD registration for distribution of ITC on common expenses. So why I am discussing this aspect is there is a recent ruling in Cumin case, and that's a very hot topic these days, which says that ISD registration is mandatory if you want to distribute credit. So, in what is input service distributor? Input service distributor is an office of supplier of goods or services which receives the invoice for the services and issues invoice to various units for distribution of credit on those invoices. So we have two rulings. One was Columbia Asia, and both the rulings are from Appellate Authority of Advanced Ruling. So Columbia Asia is a good ruling. You should definitely read it. So they have made a distinction between cross charge and ISD. They have discussed when cross charge is required, when ISD is required. So they say that if there is an element of service, say support services or shared services, then those expenses should be cross charged. But when there is no element of services, the invoice pertains to the service consumed at branch, then you have to pay GST. It's a very clear ruling. You should definitely refer through this ruling. Q means, according to me, it's an incorrect ruling on various grounds. Firstly, it's a blanket ruling. It does not make any distinction between cross charge and ISD, and it simply says if there are common expenses, ISD registration is mandatory. But yes, department may use this and deny the credit to you if it is not coming through ISD route. So therefore, what is the need is you should analyze all your expenses very carefully and see whether they should be cross charged or whether there is a requirement of ISD. So with this, I will end my presentation. Now, if there is any questions, I'll be happy to take those questions.
Thank you very much, Surbhi, for such a wonderful presentation. So let's take a few queries. It's on your screen. This is by Ranjan Bansal. BOE not reflecting
Okay.
in 2A and 2B.
I got it. So they are saying that bill of entry, which is not reflecting on 2A and 2B, but I have paid IGST. So whether I'll be entitled for credit? Yes, definitely you will be entitled for credit. I have discussed that bill of entry is not hit by recent amendment of 16(2)AA.
Okay. And next one is from Anurag Jaiswal.
I have opted for quarterly return and my customer will not get any ITC until I file R1. So if customer purchase goods on January 22, he'll get ITC only in April. See, in case of the taxpayers who are paying tax quarterly, there is a facility of IFF. In case of IFF, your recipients can avail credit. It will be reflected in their 2B. So you can use that.
Okay. Same person have the another query.
Is there any option that he can claim earlier or he can deposit liability and after deducting? I have answered this. It's the
Okay.
same thing.
Okay. This is from Niranjan Nayak ji.
I have availed ITC as per bill booking in my books, but supplier filed GST1 after due date. Whether I am eligible for this ITC or need to reverse? Okay. Okay. See, if your supplier, so I am talking after 1st January 2022. So here the question is the supplier has filed GSTR1, but he has filed after the due date. So whether you are satisfying all other conditions. So the question is whether you will be entitled for credit. The answer is yes, provided after the due date, but before September, because September is the sunset, September of the next financial year. So September 2022. If by that time it is appearing in your 2B, you will be entitled. If after that, no.
Okay. And next query is from same person, Niranjan Nayak ji.
Whether firefighting equipment, electrical panel, lights and fans, etc., should be considered as plant machinery in case of a factory. Yes, no doubt about it. These are plant and machinery. Generally, these are movable. Even if immovable, there is an exception in 17(5) C and D. Therefore, no doubt you will be entitled for credit.
Okay. Another query from Ranjan Bansal ji.
If I receive discount or incentive, whether any GST liability on me? Okay, so you are asking the same question. The person who is receiving the incentive, whether that person is supposed to raise a tax invoice, I discussed the ruling also that distributor or the dealer who are getting the credit note or any incentive, they are not providing any service. That's their usual course of action. Otherwise, also they'll do marketing. They are not doing it for you; they are doing it for themselves. No liability on the recipient.
Another one is from Niranjan Nayak ji.
ITC
ITC.
availed and reversed on the same day in September return. Department is asking to pay interest on ITC availed even if it is reversed on the same day. Is it correct? No, it's not correct. So, say there is no loss of revenue to the department. There is a case of Supreme Court Pratibha processor. There are other cases also which talks that interest is compensatory in nature. So, if it is done on the same day, there is no question of any interest.
Another one is from
Whether
yes.
ITC will be reversed on personal consumption. Yes, if it is a personal consumption, say I'm a proprietor, I buy a fridge for my office canteen, but my office and home is the same. I'm using for personal consumption also, then no ITC. But I explained this: personal consumption has to be seen vis-a-vis the taxpayer, not personal consumption of anybody in this world.
Okay. And this is Vikas ji, nice presentation. Yeah. Then next is from
Can we
can
avail
we?
ITC on raw materials that we use in CSR activities like construction of road? Kindly reply. Okay, so I have addressed this also.
Mhm.
Uh, construction, you will not be eligible for credit because that is blocked under 17.5 C and D. Whatever you are doing for CSR, that is not for providing works contract. That is on your own account. You will not be entitled.
Okay. And so nice presentation. And next one is
If I am availing Section 44 ADA in income tax, can I get benefit on derivative trading also? Means my derivative income will be 50% of derivative trading. Sir, I need to understand this provision income tax perspective from
exactly this.
income tax perspective.
Yes, yes.
I am not
Only
expert in income tax.
exactly. Ask the queries only related to GST and basically through the ITC itself. Yes.
Is there any clause under GST if e-way is missing with purchase invoice?
And next,
Um,
same person, the
Yes,
another query.
there are provision. You can mail it to Vivek ji for the benefit of audience. Let me take questions which are pertaining to ITC. Even I can
Yes, yes,
answer offline.
exactly.
Can we claim more ITC than auto populated in 3B? See, yes, answer would be mathematically, if you see, you can avail more than what is appearing in 3B. There can be reverse charge invoices, there can be bill of entry, but if it pertains to invoices and debit notes, that particular credit cannot overshoot 3B. Sorry, that particular credit cannot overshoot 2B.
Okay. So I think you have answered with all the queries. So my sincere thanks to you for such a wonderful deliberation and answering all the queries. And my sincere thanks to all of you, all the viewers, for your valuable time and many wonderful webinars and nice presentation members are messaging to you. So thank you very much, Surbhi, and
Thank you,
definitely
sir.
will take
Thank you
more
for
and more
inviting
services.
me. Thank you for inviting
Definitely.
me on your platform. I used to follow it when I was a student, and
Our
it's
pleasure.
great to be here. It's great to be here. And apologies that I took more time than allowed.
No, 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 definitely. And even request to you, and whenever you have the time, we'll do some more webinars because as earlier
Definitely.
I told you, lots and lots of confusion in the GST, and members need more and more clarification. So
Sure.
definitely we'll take your more services. So thank you very much. We'll see you
Thank you.
some other day. Thank you very much. Thanks a lot.
Thank you, sir.